Property Pulse.
With Property Finder, where life moves.
The industry insider's view of the real estate market.
Where this morning we turn our attention to the mortgage side of the real estate market. Who better to speak to than senior mortgage consultant at Mortgage Finder, Ian Vaughan. Morning, Ian.
Good morning, Richard.
Good to have you with us, joining us on Microsoft Teams if you're watching on TV. You can watch Ian. So here's the good news when it comes to mortgages. Almost doubling in the first half of this year. How so?
It's good news all round, Richard, in my opinion. Now, when the pandemic really kicked in and we were in the grip of lockdown, one of the debates internally surrounded the type of economic recovery that we would see. Would it be U-shaped, L-shaped, or V-shaped? If we look at the data and charts today, the categorical answer is up and to the right. And when we compare the recently released market statistics, we see that 63% of all sales transactions were in the secondary or ready market, showing a year-on-year increase of 40% accordingly, with the remainder of those sales occurring within the off-plan sector. The total number of transactions over this period reaching just over 27,000, culminating in a staggering 61.97 billion dirhams changing hands. Absolutely unbelievable. In terms of mortgage transactions, 40% of those sales were completed through home finance, where there was an almost 50-50 split between mortgages for villas and townhouses compared to apartments. Actually, the split was 55% for villas and townhouses.
And that's interesting, Ian, but if I can just jump in there, you say the split was like 50-50 between villas and apartments, but if we look at the stock of real estate in Dubai, the split would be much more heavily weighted towards apartments. So within the mortgage market, it seems like what you're saying is that a disproportionate bias towards townhouses and villas.
Possibly so. I think when we look at apartments, for example, there are a lot more sort of investors with cash funds to be able to purchase them. But we have seen since lockdown has been lifted, a more sort of sway towards people wanting their own open spaces, as it were.
Well, let's talk about the role of interest rates in all of this, because I know you've been looking at it closely. They are at a 7-year low. Last night in the United States, the head of the Federal Reserve, Jerome Powell, kept them on hold. Perhaps no surprises there. I'm going to ask you about interest rates in a second, but first of all, have a listen to Jay Powell speaking last night. The one threat to those low interest rates that the real estate market is enjoying is inflation. If inflation rises, interest rates may have to rise with it. But from what Jerome Powell says, that threat may be distant.
The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, bottlenecks, hiring difficulties, and other constraints could continue to limit how quickly supply can adjust, raising the possibility that inflation could turn out to be higher and more persistent than we expect. These bottleneck effects have been larger than anticipated, but as these transitory supply effects abate, inflation is expected to drop back toward our longer-run goal.
And if inflation drops back, then interest rates, the market analysts are saying, should stay lower for longer. Just how important is that, Ian, to the mortgage market here in Dubai?
It is extremely important, as we are probably all aware. The IBOR rates here are very, very closely aligned to the US Fed rate.
Just very quickly, got to pick you up on IBOR there. Just remind us what IBOR is.
It's the Emirates Interbanking Offer Rate, which is controlled by the UAE Central Bank. And as I mentioned there, the IBOR rates here, where banks align themselves to either 1 month, 3 month, or 6 month IBOR. It's important for IBOR rates here to remain low and according to the US Fed rates.
So, in terms of what happens next for the mortgage market, the first half of this year has been great. What about the second half of this year? A lot of the chatter that we hear is that the activity is in the very, very luxury end of the market. Are people who are buying these 20, 30, 40, even 100 million dirham villas on the palm, are they taking out mortgages to buy those? Or is it more the mid-market where the mortgage action is?
It's a very good question. The high-end villas are probably being purchased by cash-rich people who are looking to relocate to Dubai. The more sort of mid-market section is where it's at really for mortgages.
Appreciate your time this morning, Ian. Thanks very much indeed. Can't let you go without asking this question. How do we get the best deal on a mortgage? Lots of banks offering mortgages. They're broadly similar interest rates, but there are subtle nuances between them. 30 seconds tip on how to find the best one.
Yes, banks are open for business, although some sectors are being vetoed by some lenders. There's a lot of competition between major high street banks to grab a slice of the action, with one or two offering incredibly client-friendly products. Best solution for clients is to speak with an independent mortgage advisor that has whole of market options available.
Thanks very much indeed for your time this morning. Really appreciate it. Ian Vaughan is a senior mortgage consultant with Mortgage Finder. A doubling of mortgages in the Dubai real estate market over the past 6 months or so. And up next, Tom, you're going to be continuing the conversation